there historically has been a strong desire by Canadians to want to transact in the US. And I think what we found is that there was an opportunity for us to help educate with what we're doing, but this is something that individuals really want to do. So we felt we could actually do something about this. And the fact that, Canada is so close to home for us, it's fantastic to really think about where we can really deliver a great experience as well as a great solution.
Hi, this is Jared Linzen on behalf of Smarter Loans, talking to Josip Rupena, the CEO and founder of Milo. Joseph, thank you for being here.
Pleasure. Thank you for having me on.
So let's just start with the background about the company. When did you start Milo and why?
Yeah, so I started Milo back in 2019, and it was really around a very basic idea that individuals that were international consumers wanted to buy properties in the US, and we felt that we could do something about that to give them a better experience and really create something that was unique for them and do this all with technology so they could apply from anywhere in the world and close their mortgage from anywhere in the world.
So what does that look like in practice for your clients based outside of the United States?
So individuals from all over the world, including Canada, they can log online, they can find out within 5 minutes exactly what they're able to get qualified for. So they have some confidence that if they start looking for properties in the US, that they're going to be able to put in an offer with confidence and close that transaction. So that is one of the solutions that we offer. In addition to, once those individuals have found the home that they want, they're able to apply for a formal application that takes under 10 minutes. And through that process, they'll also know definitively exactly what their rate is and what they can count on, and then what are their closing costs and everything that's associated with that transaction. And once they have that and they decide to move forward, they'll be able to pay for their appraisal, sign their application, upload the necessary documents, some of it through tech integrations and others just uploading documents, but do that from the comfort of their home and then work through the process that usually takes under 30 days. The biggest part of the process today is appraisals tend to take a little bit longer. But once we get past that process, then we're moving on quickly to closing and hopefully finishing the transaction so that they can own a property in the US.
What was the process like before the technology was utilized here? What did it look like in the past, if it was even possible?
Yeah, great question. So it was possible. It just wasn't great. That was one of the other things that we found is that of the individuals that are international that are buying properties in the US, there's over 100 billion or so that's bought every single year. The majority of that is without a loan. So I think that that's for a number of reasons. But many individuals want to buy, but they may not know that they can actually qualify for a mortgage in the US. Or they'll reach out to their local lenders in their home countries and only find out that they don't actually offer a loan in the US. So that process usually, if they wanted to get a mortgage, they were working with a realtor. That realtor might work with someone locally that they knew, and they may or may not have had a relationship with a local bank that could lend to them. So most of the time they were doing it without a loan. And if they did get a loan, that process could take anywhere from 2 to 3 months to get this done. It would be sending things through fax, emailing documents, no digital process, no certainty, even 30 days into the process, whether this was actually going to happen. So really not a process that you felt good about, and really a lot of uncertainty through the whole cycle.
Yeah, and I think for Canadians considering who is buying properties in the US, they might imagine generally high net worth individuals who might be able to purchase these properties in cash. To what extent is that perception correct or incorrect? Who is your sort of primary customer for these products?
Yeah, so we've actually worked with lots of Canadians over the years. And I think that that's really rooted in the fact that Canada has a robust mortgage market. So individuals, when they do decide to purchase property, they do seek out financing. In many other countries around the world where mortgage is not as developed, the only way they feel that they can actually transact is with paying for that property without a loan, right? Fully in cash. So there is this element that I think many Canadians are looking for solutions like this. And they really are starting with the institutions that they already work with. But there is a very difference between a TD Bank in Canada versus a TD Bank in the US. They're entirely different financial institutions. They may have the same parent, but they're different children and they operate very differently.
And also just to touch on the idea of the the perception that folks that are buying properties across the border tend to be at the highest end of the income spectrum here. Are you primarily servicing high net worth individuals or everyday Canadians looking for these opportunities to purchase property in the United States as well?
I think it skews to individuals that have disposable wealth. So meaning they're more than likely to own property in Canada. And then now they're looking at potentially an investment property in the US, or they're looking at diversifying some of that wealth outside of Canada. And at some point, they may decide to spend more time in the US, but in the meantime, they found something that they want to purchase today. Our minimum loan amount is $150,000. So that means that these individuals usually need to put about 30% down for a mortgage. We will not only look at their assets, but we will look at the property itself. And what's unique about our product and the structure of our mortgage is that we're looking at a factor of what this property could rent for. And that's significant because in Canada and many other countries, the only thing that's really a factor is the person's own individual income to be able to qualify for a mortgage. So if you have too much debt already, it's very difficult for you to go out and get a mortgage. In our case, what's really important is that this person actually has assets, meaning equities or cash, right, or something that they can either put for a down payment and then have enough reserves for this. But we're really going to look at the cash flow of this property, which makes it easier for many people to qualify that have other debts already in place.
Right. So you're including the income potential of the property itself in the lending decision.
Absolutely. Yeah, because the property itself, since it's likely to be an investment property, there's a possibility for it to be rented at some point during the year, and that has its own income that it generates, and we can consider that for the payment. So that's unique as well.
Mm-hmm. And you said you're based in the U.S. Where specifically?
Yeah, so we're based in Miami. So our team is roughly 50 people. We have an office in Miami where the majority of our team is located, but we do have individuals across the U.S. And then we also have an office in Colombia where we have engineering resources there.
Fantastic. And so do you offer products in the US market for Americans, or is it specifically for international clients that are looking for property in the United States?
So we work with both international and US clients. So we work with international clients that want to buy investment properties in the US. And then we also have another product, which is a crypto mortgage that we launched earlier this year. So this is for individuals that have amassed crypto wealth over the years and face similar challenges to be able to qualify for a mortgage because of that wealth. So those individuals tend to be from the US, but we can work with individuals from around the world that have crypto wealth as well and want to purchase properties in the US.
I was going to say, are you marrying the two products in any way? Can Canadians access that product as well?
They can, absolutely. So this is something that we have seen is that since crypto is global, individuals from all over the world may have a portion of their wealth in cryptocurrency. So in this case, Bitcoin, Ethereum, or other types of stablecoin. And if they have their assets there, they don't need to convert them into dollars or Canadian dollars to be able to transact with us. We can actually consider all of that in the financial picture.
I've heard that Miami is very far ahead in the Bitcoin development space. And I think the fact that you're based there speaks to that as well. Does it feel like you're in the middle of sort of the ecosystem where even real estate companies now are looking at Bitcoin and crypto more seriously?
Absolutely. I think that if you think about this space around crypto 5 years ago, I think there's a lot of individuals that were thinking or maybe even some hoping that it would go away. I think today it's more likely to stay around for the foreseeable future. And what we have found is that people are choosing to keep a portion of their wealth in equities and stocks and bonds, in cash, and a portion of their wealth in crypto. And for us being in South Florida, where we see a lot of that, and there's this evolution around real estate, and our unique perspective in working with customers that we feel are very, very good, just are unlikely to ever be able to meet unique qualifications of a mortgage for a US consumer, we felt we could actually do something about it. So I think that for us, it's great to be in Miami because we get lots of international people on the real estate side and crypto consumers, and everybody's coming together. And we definitely have a friendly environment to be able to go out and innovate. So
fantastic. What do your international clients, including those based in Canada, need to know about the US real estate investment property market that they might not know or that might be unique to that specific country?
In this case, for Canadians?
For Canadians, what should Canadians know about investing in American real estate? What sort of trends are you seeing in the market that Canadians might not be as aware of? And what sort of regulation or lack of regulation or differences is there in the process that they might not be used to?
Yeah, I think that the element of buying a home in the US where property taxes are an important consideration. I think in many countries around the world, taxes are much, much lower than what they are here on the property taxes. So when someone is buying, it's very important for them to understand what is the monthly carrying cost of these properties. And that has a factor in how they think about, what does it cost to get a mortgage? What are the rates? The rates tend to be higher here in the US than they are in potentially Canada and some of the other sort of European countries. Now, all rates are moving up in tandem around the world. But I think it's an important consideration to understand that that is something that is happening. I think the other thing is mortgages in the US tend to be 30 years. That's also not the case in other markets. And I think that that's beneficial because it allows a consumer to be able to have a longer period of payback and not have a shock that they have to go out and get another loan right away. So I think that that is definitely unique. And I think that the other element of what we're seeing is that many Canadians, if you would look back sort of 15 years ago, 20 years ago, they really wanted to be in South Florida, in Miami, in some of these markets. Now what we're seeing is that many Canadians are buying all across the US. They're really looking at the Sunbelt region. So that could be from Arizona, which has become very popular, Texas, and the Carolinas, where potentially some of those markets, the purchasing power will go a lot further than buying an expensive condo per se in Miami. So I think that there's a lot of places that are interesting for Canadians to buy in the US.
Yeah, I was actually going to ask about that more directly, and I'm glad you touched on it. What is sort of the landscape of investment properties in the United States? Where are some of the hot spots that you're seeing right now? You mentioned the whole Sun Belt is really up there. Are there certain pockets of the country that are a lot more popular for investment properties than others?
I think Arizona and Texas, I think that those are attractive because you are seeing this migration of people moving out of California and some of these states that have higher state taxes. So individuals are moving there. So I think that those are great opportunities for Canadians to be able to purchase properties in those markets because those are newer communities with single family homes that they're building new schools, and it's making it very desirable for people to want to locate there. So if you are buying a property and you're thinking about it as an investment, you want to go where people are going to be moving and there's going to be a lot of support by families, and it's going to be very desirable for them to want to be there. And these are newer communities, so you're unlikely to experience 50, 60-year-old home where you might actually have some more maintenance to be built into it. So definitely looking to newer communities in some of these developing markets.
So yeah, more recent infrastructure and up and coming communities are two very good principles to follow when investing across the border. Any other advice on what to look for in an investment property outside of your own country?
I think the element of also understanding, structures of mortgages. In our case, we really lean towards individuals that are buying investment properties to take out interest only loans. The concept of amortizing loans, meaning every single month you pay interest as well as a portion towards your principal to reduce the loan balance over time. What some people forget to consider is that amortizing payment usually is 20 to 25% greater than that interest only payment. And if you take out an interest only mortgage where you're really looking at what is your monthly carrying cost, it really helps to bring down the cost and allows you to make principal payments when you want on your schedule, but you're not obligated to do it every single month. And since most people tend to keep homes under 5 years, you're not really amortizing much, but it does give you more financial flexibility. And today, where currencies are fluctuating all the time, that's an important thing to have that optionality from a consumer's perspective.
Mm-hmm. And to be clear, you're offering investment opportunities to Canadians from coast to coast to invest in properties in the United States, coast to coast, or are there some regions that you don't operate in on either side of the border?
So we lend in most of the states around the US. Lending for mortgage in the US is done on a state by state basis, but we do capture most of the states and definitely the desirable locations of where people want to buy. We can lend there.
Fantastic. And coast to coast in Canada as well? Canadians in any province can take advantage of this.
Yes, absolutely. Yeah. Last year alone, we had individuals from over 90 countries apply with us. So we can work with individuals. There's no restriction on the particular country or region of a particular country, just as long as they're not from an OFAC or sanctioned country, which Canada is not. So very happy to work with as many Canadians as they'd like to purchase in the US.
Yeah, and I wanted to ask, because it seems like you're making an appeal to Canadians by the nature of being here. What interests you in the Canadian market, and what sort of interest are you seeing from the Canadian market?
Yeah, I think we've been doing this now for about 3 years, and I started the company back in early 2019, and what we saw is there historically has been a strong desire by Canadians to want to transact in the U.S. And I think what we found is that there was an opportunity for us to help educate with what we're doing, these nuances of, a Canadian bank is not the same as a US bank, but this is something that individuals really want to do. So we felt we could actually do something about this. And the fact that, Canada is so close to home for us, it's fantastic to really think about, which are the countries that are around us where we can really deliver a great experience as well as a great solution before we think about, what's happening on the rest of the side of, the world. And, we've spent a lot of time trying to work with Canadians, Mexican clients and Brazilian clients, but we've had people from all over the world who want our solution.
I imagine it's easier when they're in the same time zone and a short drive or flight away from the property.
Yeah, absolutely. And I think this element of many Canadians do spend some time in the US. So they're familiar with the market. They likely have bank accounts in the US, right? There's more familiarity with being in the US if you're Canadian. I think that that's an important consideration. It's also something that we thought about, that if someone is on the other side of the world and they've never been to the US, how likely are you to purchase property on the other side of the world if you haven't spent some time there, right? You want to build up that conviction and you already know that you want to do this. Now, the question is, do you find the right property? Can you get financing? Do you know what to do? And then ultimately, will you transact? So we've seen not only intent by Canadians, but definitely closing lots of transactions for them.
Fantastic. And you've told me a lot about what Canadians need to know about investing in the United States in general. What do they need to know about working with Milo specifically in order to make this a smoother process? What are some of the sort of onboarding information that you would provide to potential clients?
I think an important thing to consider is, what's it going to take to be able to qualify for a loan? What we really like to see is at least 30% down payment to be able to qualify for a mortgage. The other thing that we want to see is at least 12 months of reserves. What are reserves? Well, if it costs you $5,000 a month to carry that property, we want to see at least 12 times that in account to be able to know that there's enough there to be able to service the loan. And as long as those qualifications are met, and making sure that you have a bank account, if you have a bank account in the US, and if you don't, then we can recommend how you can get one set up. That makes it easier to process monthly payments. It alleviates a lot of the back and forth and trying to find someone to make a monthly payment. So that's an important consideration. And really just understanding from a consumer's perspective, getting pre-qualified with us so they know what they can afford, so that they're shopping in the right price point. And then when they find something, they can move quickly because the market is still competitive for properties that are priced attractively. And we expect that in spite of rates moving around and potentially going higher, we don't expect there to be a tremendous amount of inventory out there. So it's really important for individuals to know where do they want to buy. And once they know more or less that region, if they find something, the ability to move quickly is going to be the difference maker, whether they get that property or not. And I think that's where we can play an important role in that by helping a customer get prepared in advance. And then when they're ready, we go through this process quickly and make sure that they get the home that they want.
Right, because often real estate is a matter of timing, and you're there to help with the timing to hit the ground running to make sure that you don't miss the opportunity while things are being processed and organized.
Yeah, many buyers are looking at competing offers. So they may be looking for an offer from a US person that needs financing. They may be looking at someone that doesn't need financing, so it's an all cash offer. And then they may be looking at an offer from someone from Canada that's coming and saying, well, I can afford this. I may be able to pay it in cash. It's really helpful if they have something from a lender like us with a pre-approval letter that makes them feel confident that this transaction is going to happen. And then we've built, trust and credibility in the market that if we say we're going to do a loan, we ultimately do close that loan. And that gives that realtor and that seller confidence.
Mm-hmm. And you mentioned, it's important for Canadians to be aware of the fluctuating interest rates right now. What about currency conversion? Because you mentioned it's also good to have a bank account in the United States. And that number of what a Canadian dollar is worth on the other side of the border has been all over the map in the last few years. To what extent is the actual currency rate a factor? And how do you advise clients to work around that extra complication?
Yeah, I think definitely the element of currency fluctuations is an important consideration, and one that I think leads to, if someone from Canada knows that within the next 6 months, they want to buy a home in the US, I think it's important to start preparing themselves and converting some of that into dollars, keep it in an account in Canada or open up that bank account in the US and start to transfer money there. Because one of the things that we are going to look for is at least 2 months of bank statements to show the liquidity necessary for the transaction. The other thing that we're going to look for is when they do put in an offer, they're going to be asked to put some type of deposit and something in escrow to guarantee that they have the desire to move forward with that transaction. And that's likely to be in dollars. So it's easier if they have an account already with dollars that they've converted. And then that way they're ready for the transaction. So it's really hard to speculate on currencies, but it definitely does seem with today, with the way that rates are rising in the US, is that the dollar will remain strong. So for someone that wants to do this, I would say that it's probably suggested that they do this sooner than later and be prepared for a transaction like this, which is likely to be a larger sum of capital required to do.
Mm-hmm. And is this potentially another place where crypto assets can help smoothen that gap, or does that only add more, potential volatility?
I think in some instances, we work with individuals that have USDC, which is a stablecoin, and that digital currency is pegged 1-to-1 to the dollar. So I think it depends in Canada. I think it'll be dependent for most individuals. But Canada is one of those markets that has a very developed banking system. So it may not be as difficult for someone there that has their currency to be able to send a wire to the US and have it converted. Someone in another country where there are currency fluctuations and currency controls, something like that might be more important to think about. But I would definitely be thinking about it from a stablecoin perspective and less so around, I'll take my Canadian dollars and buy Bitcoin, because now you are experiencing a different type of currency volatility.
Right. And I do apologize because you've already touched on this already, but I just want to ask you more directly. And I apologize if it does require some repetition here, but how are you using crypto to enhance your offering and the availability of your products to Canadian clients?
Yes, so the element of having crypto in a crypto mortgage is really important because most of the individuals that have crypto, in order for their assets to be considered, they likely have to sell it and convert it into dollars for it to be part of their qualification aspect. They also need to be able to have enough for a down payment in a product. So what our crypto mortgage does is that this customer will pledge the equal amount of Bitcoin for the loan amount that they want. So if they want a $500,000 loan, we'll require at least a $500,000 pledge of Bitcoin backing up that loan. Now, what's unique about this is that the Bitcoin remains the property of the client, but they don't need to put up any dollars or down payment for the transaction. We can finance up to 100% of the transaction, because what we're really trying to alleviate is, one, the element of that individuals having to sell Bitcoin either for a down payment or to be considered for a loan, which is likely to trigger a taxable event because they have gains. The second one is that we want them to continue to hold this for the long term, which is likely how they amass this crypto wealth to begin with. So we don't want them to have the opportunity cost of not owning it. And three, we understand that crypto is part of this transaction where many lenders will look at crypto and immediately reject the loan. We can also get them qualified for this. So we're really wrapping all of this into one transaction. So an individual from Canada that has Bitcoin, we can definitely work with them and really smooth out that process of getting qualified here in the US.
And potentially without selling their crypto. I think that's a very important aspect because as you alluded to, those who are holding on to crypto assets aren't keen to, sell them necessarily, but do want to be acknowledged in terms of their net worth. And when it comes to buying properties and other large ticket items, that they have the financial backing in crypto assets without having to convert them.
Absolutely. I think that element of keeping their crypto assets, if you would ask most individuals today, are you, a net buyer or a net seller of Bitcoin and Ethereum, you would probably find that most people would rather buy today than sell. Now, the question is, your decision to buy a home, should it be predicated around where Bitcoin prices are or not? So if you have a need to buy a home and a desire to do so, what can you do today? And for many consumers, it's really one or the other. Do I keep my Bitcoin, which I believe in it over the long run, or do I buy that home? And we're saying, well, you don't have to choose because we've got a solution like this where you can really have both at the same time.
Is there any way in which the crypto market and the housing market are intertwined in terms of, patterns that you're seeing when one goes up, the other goes down, or do they move in tandem, or is it completely separate in how the market fluctuates in both?
I think that the crypto and the housing markets today are fairly correlated. And that correlation is not because of crypto related to real estate prices. It's because it's related to rates. And with rates rising, it does impact housing because it makes it more expensive for someone to be able to buy a home because of the carrying cost. And then now you're seeing a very similar dynamic with crypto prices. With rising rates, there's a greater opportunity cost to hold crypto assets. When rates were very, very low, it was more advantageous because your opportunity cost was effectively zero. So anything that we do, any kind of return, whether it was equity markets or crypto prices or real estate, was an attractive investment. Now we're starting to see a little bit of divergence around that. So I think we'll still see the correlation. But I think for many people, the aspect of buying a home and investing in housing, it's really a personal life decision and lifestyle decision of where you are. But I think we'll see probably a very strong correlation to risk assets. But I do expect that many homes, and particularly in the US, we will still see over $1 trillion worth of homes bought in this environment where we'll be coming down from 3 trillion of mortgages originated last year. We're still going to see plenty of people buying homes in this country.
Mm-hmm. And so I know it's tough to predict, but how do you envision this relationship between cryptocurrencies and real estate evolving in the future? Do you think that what you're doing with Milo is sort of the maximum opportunity there is to mix these two worlds, or is this just scratching the surface and of what's potentially possible in the future?
We think that this is just the beginning. We just wanted to be that first company to come along and say, we can think about underwriting an individual a little differently. We can consider their crypto wealth because we know what the long-term goal is for that individual. But I think there's a number of places where, bringing someone's liquid digital collateral and wealth into a real estate transaction does make it less risky for a lender. And for an individual, it allows us to be able to extend credit to someone that otherwise couldn't. So I think that is step one. I think what comes next is there's this growing evolution of bringing real world assets to the crypto community through different initiatives and different projects that I think that over time you could have these parallel worlds of where loans get transacted, who is ultimately the owner of those loans, where it may not have to be the established incumbent institutions, but that potentially you can get a more diversified pool of individuals that want to earn interest. And hopefully there will be companies and players that bridge both worlds and then hopefully deliver a much better and more seamless lending and borrowing experience through this ecosystem. But this is sort of step one, which is let's try to extend credit to great consumers and help a lot of people realize that crypto does not necessarily mean a riskier transaction.
So it sounds like you're saying that in the future, it is potentially possible that rather than going to a bank to get a mortgage, we go to some sort of organized collective of those who have crypto assets that can provide that loan in a digital currency, the transactions made a digital currency, and the sort of interest that's earned from it goes back to the provider of the loan, which again is no longer a financial institution, but some kind of collective.
Correct. Because much of how mortgage gets originated today, we're a direct lender, so we lend our own capital, but ultimately we own the assets, which are a loan. If you think about the majority of the loans that go to US consumers, they go to government sponsored agencies, Fannie Mae and Freddie, and that's where the loans go. They will own it and then they will sell it to very large institutions that are in the business of investing capital for pension funds and sovereign wealth funds and individual investors. That is an interest rate that's being generated by these loans where you have very, very low defaults, where it's a fantastic product and a fantastic yielding asset that most of us are not able to participate in. But if you actually incorporate some elements of efficiency of how do you bring this to many, many more consumers through some of these evolutions with smart contracts in the blockchain, then there is a possibility to create this parallel world where people can think about it from a different perspective, where it doesn't have to go to the same place. And potentially we can all benefit from rising rates, that we can actually experience some of that yield for ourselves because we can help other individuals get loans to buy homes, which we believe to be very, very attractive assets.
So I have to ask, is there any other way in which you imagine technology in the crypto space or otherwise dramatically changing the funding of investment properties in the future? Any other sort of insight into how you imagine this space evolving in the next few years?
Absolutely. I think the other way is just sort of what are the requirements to qualify for a loan? So as the space continues to evolve and there's more data and individuals are keeping a portion of their wealth, can you analyze their wealth through the wallets and the assets that they actually own? And is there this place where you can actually look at an individual and you already know most of the characteristics that you need to be able to lend to that individual, and they can be pre-qualified ahead of time instead of actually saying, I want to go and buy a home. Ahead of time what is actually your purchasing power as a consumer, and you can decide whether you want to transact or not, but you know that you're not going to go through this long drawn out process because we have all of this data. And I think that that was a big component of real estate and the evolution over the last 10 years is that there's a tremendous amount of data. I think that there's a tremendous amount of growth and evolution just around the borrowing experience for individuals, because most of our information in our financial picture, it's all online already. And if it's permissioned to the right players, they should be able to tell you as a consumer what you're able to qualify for without really needing to apply.
So another potential parallel, we're talking about decentralized assets here, and real estate used to be the most centralized asset. You bought a place to physically be in it, and there's only one of them. It's not something that can be easily chopped up into small pieces and divided around the world. Do you envision that this technology, the blockchain technology and cryptocurrency, will, in a way, make real estate investing more decentralized?
I think it's already happening. I think there are companies that are exploring that and thinking about these fractionalized components of a property and being able to have different investors own a piece of it. And because of the blockchain and the efficiency of it, you're able to sell it to other individuals and you're able to sort of benefit from that. So I think that that is a trend that we started seeing last year and I think has continued to accelerate. Right now, I think a lot of it is very sort of speculative in nature for people who want to own a home potentially in Arizona and they want to benefit from potentially price appreciation of a singular home in Arizona. But I think over time, I think it's going to continue to develop where people can potentially participate in a basket of homes in certain geos. And I think that that becomes really interesting because it creates this whole other category where it's not individuals who just have to invest in stocks or bonds or crypto, but now you actually start to think about real world assets from an investment perspective. And I think that that's exciting.
Fantastic. Well, to take a step back from that 10,000 foot view to narrow it down back a little bit to Milo specifically, I just want to finish by asking, what do you hope to accomplish in the Canadian market in the next little while?
And so for us, it's really important that Canadians understand that there is an opportunity for them to invest in the US. And there is a company that's building a platform and a solution that's unique for them, that we understand what are those nuances. We want to be able to say yes as much as possible. And we want to be able to guide them so that when they do find something that in a property that they want to purchase, they know exactly what it takes to do that. And they can actually feel confident about the transaction and really have a good experience. So, we're going to continue to basically improve our product, improve our experience, but definitely looking to our neighbors in Canada to be able to help as many as possible.
Fantastic. And so just to do a quick summary of what we've been discussing so far, very quickly, Milo, the company is founded in 2019, based in Miami, and it's helping international buyers purchase property in the United States. But the added twist is that it looks at digital assets and specifically cryptocurrency assets as a legitimate portion of net worth and wealth when considering loan products for individuals based Canada, in the United States, or around the world that want to buy property in the United States. It sounds like there's a lot of trends happening right now. The real estate market that you're saying was very heavily concentrated. Canadians wanted to buy in South Florida in particular. Now it's a lot more spread out across the Sun Belt and expanding even further. Lots of action in Arizona, lots of action in Texas. And of course, Florida will always be a fun place for Canadians to buy. And that, as time goes on, you're anticipating there's going to be more connections between the cryptocurrency world and the real estate investment world, in that individuals might eventually be able to offer loans by and circumvent the bank to other individuals using blockchain technology that might help reduce the barrier to entry and provide a whole new asset class on the other end. Anything else that we should touch on and haven't, or anything else you want to add to this conversation before we wrap up?
I think that was a great summary there. Couldn't have said it better myself.
That's my job. Well, Josip, thank you so much for your time. I really appreciate it. And yeah, where can people go if they want to learn more?
So they can go to our website at milocredit.com, and then they can also follow us on LinkedIn or Twitter. And then they can reach out to our team at loans@milocredit.com.
Fantastic.